I'm going to turn my attention now to a story that's likely to dominate the headlines most of this week. That's the US elections, and all eyes are on what the outcome is going to be after November 3rd. We're probably going to have to wait for a bit to know what the outcome is, considering the number of postal ballots involved, etc. But today, what we are focusing on very specifically is markets and the US elections. Now, why are markets so keen on watching what the outcome of this US election is? From Wall Street to Dalal Street, you've had markets responding to this. Markets are pricing in a Biden win. What happens if Trump comes back? What are the permutations and combinations, and why does that matter? To speak on that, I'm joined now by Sunil Subramaniam, MD and CEO of Sundaram Mutual, and Ben Emons, Managing Director of MicroStrategy at Medley Global. Welcome to the show to both of you. And of course, we're speaking on a day when the Dow is about 400 points up, just ahead of election day. Ben, let me begin by getting your take and the very basics, please, if you can start with. Why does this election matter to markets?
It very much matters for, I think, three things. One is that who takes the leadership of the White House and the Senate will determine what the stimulus will be in the future, whether that will go through tax cuts or whether it will go through infrastructure spending. And that tax cut or infrastructure spending doesn't matter for the path of the economy. There's been simulations that the economy can actually revive faster under infrastructure spending than on the tax cuts. So that's I think, one key issue for markets. The second, and related, of course, is how will the new administration deal with the COVID crisis here in the United States? As your program was just discussing, maybe in India, indeed, you've been able to figure out to live and to work with the virus. Whereas here in the United States, we're still very challenged for that matter. There's some parts of the economy that are very open and it functions well, other parts are not. And that's all about a political message, I think, and a strategy from the administration that there's a lot of lack of coordination there. And the voters will very much focus on that, of get the right administration in place that can handle this COVID crisis. And then lastly, which is much more of, I think, part of a socio-political issue but matters, is that, the past 4 years, we've had a pretty strong economy up until the COVID crisis hit. And then we saw all the inequalities return again. And this K-shaped recovery that people much talk about, one part really performs well, the other part not. That too matters to markets because that's very much priced in. In other words, technology has done so extremely well and that's so profitable, whereas part of the other economy, the leisure hospitality, has not. And so that too matters to market and how policy will shape around that K-shaped idea to make it ultimately the true V. And I think this is what will be on display tomorrow night.
Ben, if there is a blue surge, a scenario where the Democrats take the White House, the Senate, and the House of Representatives, it would be great to push through a stimulus package very quickly. But what after that? Considering that in the umbrella of the Democrats, you also have people who want to tax the wealthy, who want to break up big tech, and maybe a lot of ideas that are not considered very market friendly. Is that being factored in, or right now it's just about hurdle number one?
It is right now about hurdle number one, because part of the election volatility, if you call it that way, that has happened over September to October was all about this next stimulus package that the House and the White House and the Senate will be trying to negotiate. This is essentially a package that is going to extend the CARES Act that we had approved in March, April, which was so large, and by the way, still affecting the economy. But there's a clear need to extend it out into next year because of the COVID impact on the economy. What you're highlighting are actually much more important factors there, much more important issues. This next stimulus bill, which will be later in 2021, say on a blue sweep, what they call House and Senate in Democratic majority, will be then really focused upon these structural investments in the United States economy, how to really adapt to a different environment to drive the economy under let's say, control the environmental impact and do investments in the economy that will be much more longer lasting. That's a very different package than the short-term stimulus package to keep the economy going as we maneuver ourselves through the pandemic until we get the vaccine truly effectively in place. And to the other points, the regulation on big tech, for example, is not just a Democratic issue. That's actually a bipartisan issue. Both Republicans and Democrats have come out to address this issue. Even President Trump himself been very specific about that big tech had too much dominance because it affects so much small business on the ground. But there's another part of that that's also very beneficial to small business. So lots of that there. I think lastly, it's also about, the US economy is a very vibrant, dynamic economy. Right? It's shown that if you shut it off, that it can have major effects immediately. And so we can go back to that shut-off strategy. So how will the new administration deal with this COVID crisis and handle the vaccine distribution? I think that's key part of the next stimulus package. That will be not only the one that the White House and the Senate have been discussing right now, investing in the pandemic with testing and tracing.
Back here.
But sure. Also in the future, yeah.
Yes, Sunil, how are we looking? How are we looking at it back home? In terms of Dalal Street, is it all just looking at how global economies and the US markets respond and a reaction to that?
A part of it is that, Tamanna, because if you look at it right from the calendar year, so Jan to March, FIIs pulled out money from every emerging market. But post-April, India has been the favored market for FIIs in a low interest rate, high liquidity scenario. So we almost got about 100,000 crores, right, of flows from FIIs into our markets because of India's economic future and cheap money being available. So in that context, whatever happens there for liquidity has a big say, because as you know, domestic mutual funds have been sellers. In the same period that they brought in 100,000 crores almost, domestic mutual funds have sold a third, 30,000 crores from the market. So clearly domestic mutual funds are waiting for corrections to deploy the money. So I think that if you look at the market sensitivity, right, what happens to the way the world reacts to the US election will have an immediate short-term impact on the Indian market, more so because the rally that's been driven by FIIs has been very, very polarized. You've had hardly a dozen stocks take up the Sensex and the Nifty. So I think that there will be a short-term impact if there is uncertainty outside. But I think that's very short-term, because that's the time I see that domestic mutual funds, will step in to buy. And second is, and I think like Ben was mentioning, like between the two oppositions, right? I think the common war is against the pandemic, right? I don't think there's much wiggle room in terms of what you want to do. Second is interest rates and liquidity are the Fed's baby, not necessarily a government's baby. So what happens there may affect the US economy, but in terms of liquidity, which always tends to leak out, there's a lot of transmission loss. While the lawmakers tend to want it to go support the US economy, you find that market participants take it wherever they see growth. And again, India is in a very good pole position. So I think sustainable liquidity with the low interest rates, which the Fed has been already indicating for a 3-year time frame, will make sure that barring the immediate correction, right, there would be a strong bounce back in flows to India in relation to other emerging economies. So I see this short-term correction, which could last maybe till January, as a buying opportunity for Indian mutual funds and for the longer-term FIIs. So it's the hedge funds which will tend to pull the money out, maybe book profits to pay bonuses at the typical year-end, which is a normal year-end phenomenon. And there's also something called a January effect, which every year takes the markets up. This year, I think that will be a very strong effect.
Well, the interesting thing is that this year, everyone is ready for a surprise after what happened in 2016. So even if the polls do show Biden is up ahead and 10 points up ahead, as per the latest polls, we know how that road could end with the 2016 experience. Well, on that note, I want to thank both of you for joining us on the show this evening.